Hello and welcome to episode 2 of the Alex.Nunemaker Mortgage Podcast. If you listened to my first episode, you know that I like to keep this short and sweet. It's what you need to know about the upcoming week, some tips to help you in your business as a real estate professional, and let you get on with your day. So, let's dive right in. First up is market news. And for this week, I actually want to look into the rearview mirror. Let's take a look at what happened last week because it was a big one. It's an important reminder that clients can take what they see in the news and become discouraged unnecessarily. So last week, as expected, the Federal Reserve, they announced that they were going to hike the federal funds rate 75 basis points. And you know from my last podcast, if you listen to it, that clients, no matter what, we knew that they were going to hike rates. It was just a matter of how much. They're just going to see the headline that says the Fed raises rates, and they're going to think that mortgage rates automatically go up, when in reality it's going to be about whether the market reads into those actions as either appropriate to get inflation under control or not. And the reaction was actually very favorable for the market. It was viewed as appropriate without creating panic in the market. So we actually saw mortgage rates get slightly better. But like clockwork, I called it. I got a call from a client who I had even had an in-depth conversation about exactly what the Federal Reserve meeting was all about and how it's going to impact rates potentially, and they thought that their mortgage rate just went up 0.75%. So don't underestimate the power of a headline, and remember that fear sells. The media is not going to explain this to them, so I explain this to clients. It's always good to have backup, but the Federal Reserve, great example last week, they raised their interest rate last week and the mortgage rates got slightly better. There is no magic lever at the Federal Reserve that controls mortgage rates up or down. So at the moment, mortgage bonds, they're in the middle of a wide range of support. So there's a lot of room both to the upside and the downside. The most important event this week is going to be a 20-year Treasury bond auction on Wednesday. So we are hoping that auction is met with higher demand. That would be good for mortgage rates. If it is met with weak or low demand, then we could see mortgage rates slide a little bit on Wednesday. So that's what to keep out. That's the big event for this week, 20-year Treasury bond auction on Wednesday. Next up is a mortgage tip. So home values, and obviously mortgage rates have risen, so clients are looking for value anywhere they can get it. And a renovation loan is a good way to get value even in this market. But it is important that it is paired with the correct client and they have the right expectations. Most people know about the FHA 203K loan, but they might not be aware that Conventional has their own renovation loan product called a Home Style. Work almost identical, it's just that one's an FHA loan and the other is a conventional loan. So maybe you have a client that's targeting a particular area, they think that they've been priced out, or they just don't want to pay those top-end prices for something that's turnkey and they want to renovate a property. A renovation loan allows them to do that. The first thing, though, is that the buyer's not going to be doing the work themselves. Even if they're super handy, we're not just going to give them a hammer and tell them to, go for it. Instead, there's going to be a licensed contractor. They need to be approved by us. They're going to outline exactly what they're going to do, materials, labor cost, lay out a detailed plan. They're going to hand that to a HUD consultant. HUD consultant's job is to make sure that that plan is detailed enough, that it is reasonable, and then they are going to hand that plan off to an appraiser. And the appraiser, this is the beauty of a renovation loan, is going to value that property based upon the after improved value. They're going to get credit for the work that they are putting into the property. This is good for someone who has a down payment, they are otherwise credit qualified, but this is not a good fit for a client who is credit challenged. There's no magic button that's going to, the renovation loan doesn't make their credit score up. It doesn't give them a down payment. So they need to have those things in order. But if you have a client that's otherwise credit qualified, it's a great product for them. FHA requires 3.5% down. A conventional loan requires 5% down. Quote for this week: don't be upset with the results that you didn't get from the work that you didn't do. So there's a lot of distractions out there from social media. Heck, it can even come from friends and coworkers. But make sure that you're keeping yourself accountable to your goals, and make sure you're doing one thing every day that will bring you business tomorrow. So have a great week. If I can help your clients get pre-approved and win in this market, let me know.